What's up, everybody? Sunday, May 23rd. We had a beautiful day here in New York City, like summertime weather. I always feel like, in New York, if you get a day like this in May, that's like a bonus, all right? Because this is not normal weather for May. I mean, we're almost up around 90 degrees. It was beautiful. Everybody was out in Central Park. I was out in Central Park. So if you get a day like this in New York City in May, to us, that's like a bonus. All right, let's talk about what's going on. I have been hearing a lot of that back in New York City. I have been hearing a lot of talk, and again, it's the usual, and by the usual, I mean the hysterical doom and gloom, doomsday talk, this time focused around the banking situation, reserves, and how reserves are, causing the banks not to take deposits, to turn away deposits, to, result in this massive loan, like banks are not lending, right? Banks are not lending. People hysterical about this, at least the so-called, all these really smart analysts on Wall Street. I mean, they're talking about this, they're hysterical, they are painting this doomsday picture. So, what do? I mean, I go over the numbers, all right? And I look at the latest data from the Fed. Let's go over it. Loans now at the highest level in 7 weeks. Consumer loans, all right, the highest level in 13 months, and they are now expanding once again year over year at the fastest pace in 15 months, all right? Credit card loans, the highest level in 5 months, and while they're still contracting year over year, that contraction is slowing down. And as a matter of fact, the contraction in many of these banking metrics that has been so evident now for the last year, the contraction is abating. The trend now is that all of these metrics are turning back up. So I mean, you can write all this doom and gloom hysteria, these people who think they're so smart, and so insightful, and they're above everybody else in terms of their understanding. But when you look at the numbers, it is just not happening. The same thing with bank deposits. Bank deposits are at an all-time record high. They were up again. So I don't know. I mean, look, I don't profess to know every single thing on the inside of banking. I'm not there. I'm not Jamie Dimon. All I can go by are the numbers. And the numbers clearly show, number one, an improving trend from where we were 6 months ago or 5 months ago. Number two, it shows that credit demand is picking up, which is a positive thing for the economy. It does not show hey, remember the hysteria back in February about how when the SLR exemption expired at the end of March, banks were going to be dumping treasuries like crazy, and that was going to cause rates to skyrocket. Well, guess what? Treasury holdings at the banks are at an all-time record high. And that is every segment of the Treasury market, not just T-bills, but notes and bonds as well. All right? There was a period, I would say maybe a month or 6 weeks, where, we saw a little bit of a reduction in a segment of Treasury holdings that the banks had. Likely they were T-bills. That metric is back to an all-time record high. Let's talk about the inflation thing, because another guy tweeted, and I got into this tweet discussion with this guy who I happen to know, smart guy, educated. I think he's educated as a lawyer actually, but he's a writer in the financial industry. He writes for, I don't know, he might write for the Wall Street Journal, I don't remember. Talking about how producers expect to see higher prices in the futures. Now these are surveys, right? And I don't know what particular survey he's referring to. It could be the the market surveys, M-A-R-K-I-T. It could be some of these other surveys, these industrial surveys. Yet, and I said, well, forward pricing of commodities, if you look at commodities right now, if you just about any single commodity, I mean, if you look at corn, if you look at lumber, is like a stark example. I mean, 1 year out, lumber prices from where they are now, where they already dropped 30%, they're down another 50%. All right? Corn, soybeans, copper, I mean, you name it. And I said to him, well, that's not what is being indicated in forward pricing for just about every single commodity. In other words, they're in backwardation. In other words, near term right now, spot prices are higher. Okay, understandable. We're still in this kind of pandemic supply shock, supply squeeze, whatever you want to call it. But you go 1 year out, and I'm not just talking about leaping 1 year. Next month, the month after that, June, July, August, every single month as you roll out, prices are lower. The term structure is in backwardation like that. So forward prices are way down. And these are contracts that are entered into ostensibly where both parties have an understanding of conditions, what they're going to be, 6 months from now, a year from now. And he says to me, contango means people are optimistic about prices. And I'm like, dude, who mentioned contango? Contango is when you have a positive curve, when prices are higher as you go out. What I was explaining was the exact opposite, that the term structure right now of these commodities is that prices are declining as you go out. He's totally confused. So, I mean, I'm going to look at the markets, and if it was one market, I could say, well, maybe, I don't know, expectations or conditions in that market, maybe they got it wrong. Maybe it'll turn out to be the wrong way. But every single commodity market has the same structure where you have nearby contracts, spot contracts, higher, and I'm saying much, much higher than the deferred. So right now, yeah, I get it. Right now, we're still in a pandemic-related supply shock. But you go out 1 month from now, and then if you go out 2, 3, 4, a year out, I mean, you are seeing significant discounts in prices. So the market's telling you right now that with the information the market has, and again, I'm not just talking about one market. I'm not talking about only lumber, all right? Or I'm not talking about only wheat or corn. With the information all of these markets possess right now, they're all saying prices are going to be lower as we go out over the course of the next 12 months. I mean, that doesn't qualify me as a genius. I'm just looking at reality right now of what exists out there in pricing. Like, you could literally make a deal right now. If you wanted lumber a year from now, and what is it? Is lumber $1,500 a board foot or something like that? I don't know the units, how they price it. I think it's $1,500 per some measure board foot. And if you wanted to get a deal right now, if you're a builder and you want lumber a year from now, you get it for $900. You get it for $900. It's not quite a 50% discount, but I mean, that's a significant discount. So, I mean, if you're looking to build, or, any commodity, basically any commodity. If you're a sugar importer, if you're a cocoa importer, if you're copper has a little bit of a milder backwardation, I would say. The discount is not that great going out, but it still is a discount. Oil, same thing. By the way, let me mention something about oil. Very interesting, because I went over the EIA, Energy Information Administration, the weekly petroleum status report, right? And what I'm seeing, gasoline demand very strong. We're at the highest level, I believe, in 13 months, possibly. Could be a little bit higher. Gasoline demand in the latest week. However, gasoline production, and I don't remember I don't remember how high it is, like comparatively going back how much time, but it is extremely high right now. Let me repeat. Gasoline production right now, and although we have a year-over-year negative in the differential, like a year-over-year, gasoline inventories are down right now. Not by a lot, I think about 8% or something like that. Gasoline production is at the highest level in years. I wish I had the figure in front of me, but I don't. Gasoline production has been ramped up. So and it's another thing that people don't understand. Because of the pandemic, a lot of producers were not able to produce, right, for various reasons. Didn't have workers, had to shut down or whatever. As soon as they were able to produce, like when restrictions started to get lifted and stuff like that, they ramped up like crazy. They ramped it up like crazy. So what does it mean?